Hello everyone, it's another day. Please don't forget to share, like, comment and subscribe to my YouTube channel. Thank you all. I love you. In today's video, we are going to do the recording of the various subsidiary books into their ledgers. Like I said, we have the sales ledger, the purchase ledger, and the general ledger. The sales ledger records transaction from the sales day book, the purchase ledger and the customer's book. The purchase ledger records transactions from the purchases ledger and the supplier's book. Then the general ledger records the nominal and the real account. So we are going to start with the first customer. We are going to start with purchases day book. There was just one customer, so we are going to create a ledger account for the customer, Fast Traders. So I write Fast Trader. Okay, we'll create an account for Fast Traders, and we write the currency we are using. That's CFA francs. CFA francs. And now, this Fast Trader, the first account that is found there is on the in the purchase day book. All the purchases of an enterprise are debited because they are the main expenses of the enterprise on the debit side and decrease on the credit side. So since the purchases account is debited, we are going to do the double entry principle, and this Fast Trader is a supplier. So we are going to credit the Fast Trader. The transaction was on the 1st of January 2024. We put here purchases. Of course, it was credit purchases. So we write the amount 2,500,000. Then we go to the next account. Any account that anywhere we are going to see Fast Traders, we are supposed to pick it and record in that account because we want to create an account for Fast Traders. So if you come to the cash book, you will see Fast Traders on the credit side of the cash book, which therefore means that it is going to be debited to respect the double entry principle. So we debited. It was on the 5th of January 2020. Right here, on the 5th of January 2024. We have to also know if it was by cash or by bank. Fast Trader was by cash. We put cash. And how much was it? We look at the amount. It was 1 million. So we put our 1 million here. Then we also continue to look. There's no any other Fast Traders, but when you go to return outwards journal, you will see Fast Trader. And this return outwards is an adjustment account to the purchases journal, which means it is credited. So to respect that double entry principle, we are supposed to debit it. So it was on the 6th of January 2024 with 300,000. So we come here, we put 6th January 2024. We have here return, and the amount is 300,000. Then we go through the other account. Of course, this one is return hour, so there is no Fast Trader. So Fast Trader has 3 entries. We are supposed to balance off this account. Balancing off account simply means the debit and the credit total should be equal so as to determine the amount on the lesser side which will be carried forward to the next period. So if we look here, you will see that the higher amount here is 2,500,000. 500,000. We balance it off with 2,500,000. And we subtract. We subtract the lesser side from the higher side. So this lesser side is 1,300,000. So if we take 1,300,000 from 2,500,000, we will have 1,200,000, which is going to be on the 31st of January 2024. We call it balance carried down, 1,200,000. This 31st, it is at the end of the month that we are supposed to calculate and see the balance to be carried to the next period, or if it will have a nil balance. And then balancing off an account simply means you want to determine the balance, if there is a balance, or you want to see if the account is equal. So we go to the next bright code. We write our bright code here. It is always good to centralize the title. And we have here the credit and the debit. Don't forget about the franc CFA, which is the currency you are using. Franc CFA, the currency we are using. So when would it take place? We see we have on the 2nd of January 2024. And the amount was 3,200,000. It was a sales ledger, which was a sales account. It increases on the credit side, so the sales actually increase, which means in Brightco we are going to debit the account. So we have here, when was the date? That's on the 2nd of January 2024. We have here sales, and we have here 3,200,000. This is the customer's account, because the enterprise sells to the customer. The customer here was Brightco. Then we go through the various accounts. If we will see Brightco in the cash book, you will discover that this is Brightco, which Brightco paid by cash 2 million. That was on the 4th. And since it is decreasing the customer's account, we come here, we put on the 4th, and we credit it with cash. It was 2 million. And we do go through again to see if we will see Brightco. You will see Brightco here under return hour journal. That was on the 7th. So this return hour journal was also recorded Brightco with 400,000. This account, when was it? On the 7th? On the 7th of January 2024, we put here return outward. How much? Always need to see 400,000. We write our 400,000 here, and we balance it off. Balancing it off, we simply look at the higher side. We'll see here that we are supposed to balance it off using the debit side. We need to use rulers, but since I'm going to take time when using rulers, it's going to be time wasting, so I decided to use my hands. So we have 3,200,000. 3,200,000. Then we add the credit side, we have 2,400,000. So if we are to look for the balance carried down, it will be 800,000. All right, you need to carry this balance on the debit side to show that it is a balance that will be carried forward. You put here balance brought down, 800,000. This is the balance that will be carried to the trial balance. Then the next account, we go to the cash book. All right, in the cash book, you will discover that you have cash bank. These are contra entries. These contra entries are not supposed to be shown in a ledger account, because we have already gotten their various totals here. This book is made up of cash in hand and cash equivalent. So here, this one was made up of cash in hand and cash at bank. So we don't need to prepare accounts again for any contra entry. So the next account here is the capital account, which was on the 9th, and it was on the debit side. So we are going to credit the capital account, credit side, debit side. We have our CFA francs, So we have here on the credit side, which was on the 09/01/2024. It was by bank. So we put here bank 2,500,000. So it was the only capital that we have. So we just simply carry the balance here on the 31st January 2024. We have our balance carried down 2,500,000. Then the next account, on the debit side, we don't have any other account. On the credit side, we have office furniture. So we take office furniture, that was on the 3rd. We have our office furniture. We have here the debit, the credit, CFA francs. So it was on the 3rd and it was by cash. So we come here, we put on the 3rd of January 2004. Cash was 1,200,000. So we don't have any other balance again. So we balance it off. 24th, we have balance carried down, which is 1,200,000. And then the next account is salaries account. Salaries account, because we have Fast Trader, we have used it, bank, cash, we have already used all this. So we have salaries account. Under the salaries account, it was on the 11th. We write our salaries account. The 11th of January 2024. Was it by cash or by bank? We have by bank 500,000. We write here bank 500,000. Have francs, CFA francs. Then balance brought down. Balance carried down. I've forgotten to write the date. Is 500,000. So, thank you for watching. Please stay tuned for my next video. And don't forget to like, share, comment. And if you are coming across these videos for the first time, please subscribe and turn the notification bell on. Thank you.